Hello everybody, I'm James Leichter from Aptora. Welcome. Today we're going to talk about performance-based compensation. Now that's kind of a made-up term. I don't think you'll find that in a university textbook, that term. But in my mind, performance-based compensation is simply figuring out ways to compensate people, bonus people, spiff people based on performance, based on meeting some kind of objective that you might have for them or for their department. So there's many ways to do performance-based compensation. There really isn't a wrong way. I mean, assuming that what you're doing is lawful, right? There isn't any wrong way. The methods that I demonstrate today and talk about could work perfectly for your company, but most likely you'll want to massage them a little bit to meet your own needs. So let's first talk about the different ways we can pay somebody what I'll just call a commission, a bonus during this session. We could pay them for meeting some type of sales objective like gross profit dollars. It could be based on the retail price of an invoice. It could be monthly performance based on different factors like how many items they sold or if they sold certain items. So there's just lots of different ways to do it. Probably the most common thing that I've ever seen is paying a spiff or a bonus on selling service agreements. If you sell service agreements, then you can easily pay a spiff or a bonus each time someone sells a service agreement. A few things I'd recommend on that is pay a bonus such as $15 for a service agreement. But if there's an additional piece of equipment under the same roof, then I'd add $10 for each additional piece of equipment, or I should say system. I shouldn't say piece of equipment. I should say system. So you have a heating and air conditioning system downstairs, another one upstairs. That would pay $15 and then $10, $25. I would also put money in a bucket to fish, metaphorically speaking, put money in a bucket, and heck, a bucket might work, but put, say, $5 in that bucket to share with anyone in the office that was part of the process of selling a service agreement. So in other words, if your CSRs set the stage to sell the service agreement, meaning they say something like, do you own one of our safety and efficiency agreements? Oh, you don't. Okay, I wanted to see if you qualified for the 15% discount and priority dispatching. Oh, you want to know more? I'll tell you what, let me tell Dan that you don't own one of our safety and efficiency agreements, and he'll explain the whole thing to you. And if you want to invest in one, then you'll go ahead and get the discount. So if they are laying the groundwork for selling the service agreement, they should get part of that as well. And I made up these numbers. $15 is pretty common, pretty standard. $10 for each additional system. And my experience is $5 or $7 goes to that bucket to be split among the office staff, those of which are part of the process. So it wouldn't go to the entire office. It would just go to the people that have something to do with setting the stage for selling the service agreement. Let's say that you like that idea. You want to give people a spiff when they sell a service agreement. How do you do that? When you create a service agreement, and I'll just create a new item here, a new invoice item, and we'll pick the service agreement type, you'll notice that there is a place to add a commission. So type in the commission there, and that's the first stage in setting it up. That's the amount that will be paid in dollars when the person sells this service agreement. So type it in there. That's your first step. If you want to pay a commission on any other type of invoice item, such as an inventory part, well, the same situation applies. You'll find in the accounting tab a place to enter the item sales commission. And again, that would be a dollar amount, and you would enter that here. So all of the various item types have that commission. A subtotal doesn't, of course, but the rest of those do. Now, one interesting thing about a group item, as you might know, a group item is a container of other items. All right, so I'm assuming you know, but I'll be brief. When you create a group item, you're actually just grouping up items that already exist. and the group item doesn't take them out of inventory or lock them up in any way. It's just a way of grabbing several things and putting them into a single container. They're still out there, those single items, and you use them any way you would use them if they weren't in a group. But when you create a group item, the commission is the sum of all the commissions of those items. So if you have 5 items in there and the commissions are $10 each, then the group item pays a $50 commission. Okay, so that's the only difference in how you set those up. Now, once you have commissions in these items, you do have the ability to split those commissions among different people. I'll give you an example. We're going to go to employees and go to lists and go to commission method list. If you don't see that option, then you either don't have permission in security. I mean, you've got our permission, right? But maybe you don't have the software's permission. So you would go into user security and find that and check the box so that you can get to it. If you still don't see it, there's a preference to turn that on. Go to preferences, payroll, company, and there's a checkbox that needs to be checked to expose that feature. All right, so there it is. Let's click it and that'll open a list. Yours might be empty. Mine has some things in it because it's all set up already. Let's right click, do new commission method, and let's select the item commission method. Now once you select a method, you've got a little cheat sheet down here that really does a good job of explaining it. I probably don't even need to explain it. You could just read this and you would understand what it's doing. The item commission method looks at the commission that you've entered into all of those items. But what's unique about it, and let me give this a quick name in case I want to use it. All right, what's unique about it is the value setting, which is explained down here. You have the ability to split that. So you could have a lead tech and they get 60% of it. And then you could create another one for a helper or an apprentice and they would get 40% of it. So if they sell something that pays a $10 commission, one person would get $6, the other person would get $4. If you leave the value at 0 or 1, then it pays the full amount. 0 and 1 mean the same thing. When you have a 0, we assume what you meant is you don't want to split. And of course, a 1 wouldn't split it at all. So 0 or 1, there's no split. So again, that person would get the full $10 commission on that item or whatever the commission was paying. Incidentally, you can override these things when you go to process payroll. When you go to process payroll, all of this is just a suggestion. The software keeps track of all of these commissions, how much, who, etc. You can override that. You can refuse to pay whatever you want. We'll talk about processing the commission more in a minute in payroll. So that's how you set it up. Now recently, on a coaching call, I was talking to one of my clients, one of our users, longtime user in fact, and they wanted to know about piecemeal pay. They wanted to pay their installers piecemeal. They actually do now, but they do it manually, and they wanted to know, is there a better way to do this in Total Office Manager so it's not so labor intensive? We're doing everything by hand. Well, if you haven't heard of piecemeal, it's a common term in our industry. I don't think that it's a term in any accounting book. I haven't seen it anyway. I think our industry made up that term. Not that it's a bad thing, not that the term's incorrect. I just mean that it's probably not an official term. But piecemeal for this discussion just means that I'm going to pay you piecemeal. I'm going to pay you $25 to set the equipment. I'm going to pay you $50 to rip out the equipment, whatever. And you have a schedule of payments based on a piecemeal approach. So how do we do that in Total Office Manager? I have it set up here. So let's just open one and examine it. This commission method, I gave it a name of crew lead because they call it a crew lead, add system. So that would be additional system. Why don't I not start with that one? How about I start with something before that? Let's see. How about that one? I don't know why I was picky about which to open. It doesn't really matter. You'll get the idea. So here we have crew lead, connect gas meter. Now, what's the value? The value right now of that is 0. Well, then we would want to give that a value. We might say that we will pay $25 if you connect the gas meter. But remember, that's the multiplier. So this is where some people get confused anyway. That's the multiplier. That's not the money that you're paying that person. So if you want to pay $25, then you need to have a commission of $25 on an item if you want to use that approach. So what we would want to do is we would want to create an item, a service item, for connecting the gas meter and apply the commission to that. And if the crew lead is going to get all of that, then we would leave it at 0. Let me show you how that works. Let's go back to our item list. And let's do a search for crew lead. So I'll search the sales description. All right, so we'll call crew lead, I think is the name we gave it, or crew. Okay, piecemeal. All right, there's the group. Let's open this up and it'll make sense. So I created a group item called piecemeal comp, C-O-M-P group. And then I gave it a really good description explaining it, so people who weren't aware of what this meant, they could read this and see what all this was about. So we have a good description. In the group tab, we have all of the items that pay the commission. So we have piecemeal add system. Make this a little bit bigger. So we have piecemeal additional systems, piecemeal communicating zoning, gas meter, etc. We created all those items. Now if I right click and click edit, we can open that item. And you can see how I set it up. So it points to a chart of accounts. The income account doesn't really matter because we have a price of 0. We have a retail price of 0. I locked it. You can see the red locked. If I go to the accounting tab, you can see how I locked it down here. We aren't selling this per se. We need to get it on an invoice, but we don't want it to affect our retail amount of the invoice. So we have a markup method of 0 retail price, and that's actually a type of markup that we have in the software. It is a 0 retail price markup method. The reason why you would want to create one is so that everybody knows that you didn't forget to mark this up. A 0 retail price tells everybody that's what I meant. And there it is. So there's actually a type of markup called 0 retail price. I gave it the same name. And then I typed in a retail price of 0, made sure it was 0, and I locked it. And then I gave it a description that makes sense to me. Again, in the accounting tab, the income account won't matter, but you have to pick one. The COGS account points to labor COGS, labor cost of goods sold. And what is the cost of goods sold? The $50 commission. So there's the commission that we pay to what? Additional systems. If there's an additional system, then we're going to give $50 for that. If there is makeup error, let's open that. If there's makeup error, then we're going to pay for that as well. Again, the same setup. I gave it a name of piecemeal dash. Always start with the first. Be consistent in what you start with. I'm starting with piecemeal. And then I've, again, locked the retail price at 0. The markup method is 0. Go to the accounting tab. The cost of goods sold is pointing to labor, COGS. And for how much? 25 bucks. That's what's going to go into COGS, labor. It wouldn't be a commission, really, because this is their compensation. So I'm not pointing to a commission chart of account. I'm pointing to a direct cost or cost of goods sold labor account. Put 25 bucks in there. Again, there's where I lock the retail price. You don't have to do that. I'm just trying to make it clear to people that I don't want a retail price in there. And the technicians wouldn't be able to change that in the field. So that just helps to make sure that that stays at 0. Now, by the way, I gave this a category called piecemeal compensation. Call it anything you want. I do recommend you create an item category just for this purpose. That makes it easy to find these things, and it makes it very clear as to what they are. Let's open up one more. Let's say trim set. I'll right click, edit. And I have another one. Same thing, same setup. The commission's $150 for trim and set. All right, now remember, the commission is on each of these items. And how does it pay out the commission? Well, it first looks to see if you have a commission method associated with this employee, with whatever employee we're talking about. So it looks to see, when you create an invoice, it looks at the items and notices the items have commissions on them. Then it looks to see if there's a commission method for the particular employee who is associated with this invoice. Now, as I alluded to earlier, one of the nice things about this feature is if you have 2 or 3 or 4 people, they can split this money. And again, we use the value to split that money. Somebody could get 10%, 50%, 30%. So you could split it any way you like. And I'll show you how that happens in a moment on the invoice, but that's your setup. Now, before I move on, I want to talk a little bit more about these commission methods in case you want to do something differently. Let's go back to this one. Each one of these, as I mentioned, is explained in what I'll call this little cheat sheet down here. It does a pretty good job of explaining what it is, especially if you know a little bit about it already. But I want to show you a feature that not everybody knows exists. The percentage of total retail price has a variable option. So let's say that you would like to pay, for whatever reason, you want to pay somebody 7% of an invoice, but not unless the invoice is $100. It has to be over 100 because your diagnostic fee is maybe 99, and you don't want to consider sales tax. But up to 5,000, you want to pay 10%. Well, you could do that. The way you would do it is, first of all, don't check the include sales tax in the retail price. I don't know why anyone would ever want to do that, but it's there because somebody asked for it, because it wouldn't have been my idea. Check that variable box right there, and that pops up. So you can say, this all starts at $100, and then it goes to either 1,000 or 5. I think I said 5,000 in my example. Did I mean 4,999.99? And you could type that in, and then we'll say the commission 7%. And then notice the software automatically entered 5,000. So if it's 5,000 and over pays 10%, then we did it correctly, right? And then we'll say 10% for that one. Down at the very bottom, it automatically fills out the highest amount it's seen so far, which is 5,000 and higher pay. You don't have to fill out this whole thing. You could just come down here and just put 10% in there. And so you've told the software that that's where you want to end. 5,000 and up, it's 10%. That's how you can set up that type of scenario. Let's do right click, new, talk about maybe 1 or 2 more. one of the most common is the item commission that we talked about. Service agreements have their own. So this commission method only applies to service agreements. And the way you can use this is paying a commission. So you could enter, say, 10 to pay a 10% commission on the retail price of the service agreement. So that's a special method that can be applied to a service agreement, allowing you to pay a percentage of the service agreement amount. Otherwise, it will look at the service agreement's commission amount, and you can use an item commission. It treats it just like an item. So I'll say that again. When you create an invoice item and the type is equal to service agreement, you can type in $25 and use the item commission method we talked about, and that works. But in addition to that, this special type allows you to pay a percent of the retail price on a service agreement. So that makes it a bit unique, and you have a lot more flexibility. You can create as many of these as you'd like. You can see here that I have various methods for what we'll call the crew leader, and then I have various methods for the helper, and that takes care of the installers quite well. What about the service technicians? My favorite method of compensating service technicians, and it would be the only way I would work for you. If I worked for you as a tech, this is the only way I would accept being paid. Flat rate book time. Assuming you have a flat rate pricing system and assuming that labor time is known to you, known to the technicians, then you could pay them based on the book time. And that's what the automotive industry has done since I was a little kid. As far back as I can remember, they always paid book time. You might remember the days where they opened up a big Chilton book and they looked up your car, the water pump, and it called for 2 hours of labor. That's 2 hours of labor for the mechanic. So what we would do for our technicians is we would pay them a certain amount for the diagnostic and travel process. Maybe that's 1 hour. So the diagnostic process, get there, figure out what's wrong, 1 hour. Maybe for commercial work, it's 75 minutes. Then you pay book time. So if the book calls for an hour to replace a condensing unit, fan motor, and capacitor, then they're getting 2 hours for that job. Now you still hold them accountable for callbacks and quality of work and so forth, but they should be able to beat that 2 hour time frame that's called for. That's how you would set up that scenario, pay based on labor minutes. Now keep in mind when you do that, then let me clear that and pull up an item for us to look at. When you do that, you want to make sure that your tasks have labor minutes in them. So you'll notice that I have a flat rate task here to install the thermostat. And that pays 45 minutes. And if it were, say a Wi-Fi thermostat, it might be 1 hour. If it were a non-programmable, it might be just 25 minutes. It would all depend. You do what you like, but that's where you put in the labor minutes. The software then looks at the invoice, looks at the technicians on the invoice, looks at the items, counts up the labor minutes, and that flows into payroll just like a time clock timesheet entry would. By the way, feel free to ask any questions if you would like. You can type questions in and I'll address those on the fly. I've got people behind the camera that'll just read me your question and I'll address it. Did we have any?
Yeah, we have one.
Oh, okay.
Can text still change the retail price in a work order if it is locked? I know it cannot be changed in Tom, but was an issue/workaround in mobile that our guys found.
I don't know. The question was, can technicians change the retail price of an item that's locked? I'm going to say it like this. I wouldn't doubt it. Even if there's no bug, there's probably some tricky way to change that price. They can always change the quantity to change the price. It's really tough to lock that down tight, but if there's a bug on that, I'm not aware of it. So I would have to look into that and see if there's a bug. I'll write that down, and I'll look into whether or not there's a bug concerning the retail price. And if you know of, by the way, if you know of a ticket number, like if you put in a support ticket for that, please remind us that that support ticket hasn't been addressed if that's the case. Or if there's no bug ticket in and you've discovered a way to change the retail price, let us know. And if there's some way we can address that, then we'll try to do it. But do keep in mind, I would never consider something like that a guarantee simply because it's software, it's an app, and people can just sit and play around with that and come up with creative ways to work around the fences we build for them. Other questions? Okay, all right. All right, so we just talked about entering commissions, or pardon me, entering labor time rather, for flat rate tasks. You can do the same thing with that piecemeal. So the piecemeal could have worked a different way. Rather than pay $150 for something, you could have paid 5 hours. So you could do it either way. You could pay labor time or pay the dollar amount. I'll open up that task again. Should have left it open. So here's a flat rate task, and I can either put a commission in here, which could be your piecemeal pay. Maybe it's not a commission. It could be. It could be in addition to your hourly rate. But I could put a dollar amount in here to give you if you perform this task. Or I could give you labor minutes, and I could do both. I could combine these if I wanted to. So you can get really creative. It's very flexible. But my preferred method is pay minimum wage, whatever that is in your area. If you follow federal, then it's a lot lower than some states, but you pay minimum wage, and then you come up with and pay minimum wage all day long. So they clock in the morning, they clock out at night, clock out for lunch if that's the policy. But all day long, they get paid another rate that's added to the minimum wage for the book time. That's how I like to do it. And I think the technicians generally love it because they beat the book time. Why would you love it if you're paying them more? How can it be good for you? It helps you predict unbillable time. It's really important that you reduce unbillable time and that you can predict and project unbillable time, because unbillable time is the killer of the field service industry. All right, hope that's all clear as mud. How do we get that money into payroll? Let's talk about that. I'll create an invoice. And we will grab an item to put on here. Let me resize that. Everything's changed because I'm on a different monitor. All right, so I will grab what should I grab? I'll grab that group item. We'll do that one. Just throw all of them on there. Okay, so I grabbed that group item. What you would do is, once you build out your work order, and if you start with a work order, you should put this on the work order. It'll carry over to the invoice, but you could add it to the invoice later. Either way, I would put this at the end of the invoice when you're finished invoicing. It has no effect on retail price because none of this has a retail price on it. It's just to create payroll. After you enter that, then you would remove the things that don't apply. So whatever doesn't apply to this situation, you just delete it. But you start with all of them, and that way you can get rid of what you don't need. It's easier to remove than it is to add, in my opinion. All right, so now that we have that on there, let's take a look at what happened. We'll go to menu, and we'll go down to, got to pick a customer. Now we'll go down to assign commissions. And if we had come from a work order, the software would know which employees belong in this list, and it would have automatically added them. I'll do it manually. I'll pick John. And the commission method would be, say, that one. And then I'll pick John again. And it would have added that one. Now again, it would have done it automatically had I created a work order and then came from the work order to create the invoice it would have been already done for me. That person would be listed in here as many times as necessary. Now, how does it know what commissions belong to what person? You always have the ability to go into assigned commissions and change it around, but the way it knows is this. If you go to your employee list, right-click on John, who we were just talking about, and go to his payroll items, you'll notice that in the General tab, you have the ability to set a default commission method. So let's say that we want to give that person the commission of commission on retail price. So that's the commission method. We're going to give him a commission on the retail price. We have to point that to an earning item. When we pay him, the software has to know what payroll earning item does this belong to, and I'll pick sales commissions. And then I have to make sure that in earnings, there's a sales commissions. So we'll pick that one. And it should be happy with all that. So we'll hit save and close. That's how it knows. When we go to create an invoice and we have that employee associated with the invoice through the work order, then it automatically picks that person and populates their payroll. Let's take a look at that. Let's do another invoice. And I'm going to need to resize that real fast. I'll pick a customer, and I will pick a task, and another flat rate task, a capacitor, and a thermostat. Okay, so we have a $353 invoice. I'll go to menu, assign commissions. And again, if a work order were associated with the invoice, I wouldn't have to do this. It would be in there already. It's not a bad idea to have management go in here and look at it, but I wouldn't have to do this. I wouldn't have to remember. It would be in here for me. But we're going to pick him, and since his default commission method was set up, it populated it. It's a rate of 5%, and that's $16.10. So that can be in addition to his salary, his hourly wage, whatever. Now this particular employee is set up as an owner. You know, we're calling him John D. Owner. But if you're an owner, you might want to do this for yourself. You might want to pay yourself a commission on sales you make. This would be an easy way to do it. In addition to your salary, you could earn a 5% commission on sales that you're making, and this would make it easy. Now, there's an opportunity, if needed, in here to add a memo. Maybe you have something to tell payroll. You could put a memo in here. The job cost checkbox has no effect on your income statement or your balance sheet, your financials. What it does, though, is it tells the software that you want to consider this expense as a job cost, a cost of the job. And that way, job costing reports will include it if it wasn't included already. So you might consider this commission overhead, an expense, not a direct expense, not a cost of goods sold. Then you would leave that box unchecked. But that assures that the money gets on the job costing report, that we want commissions, bonuses, and SPIFFS, in this case, treated as a job cost. Okay? All right, that's about it. You can edit the values, add more people, and that flows into payroll automatically. Remember the method to pay them by time. You'll notice that my tasks show the amount of time in minutes at the end. So we have a 30-minute task and we have a 20-minute task. This technician could potentially be getting 50 minutes of pay as well. So we'd add a diagnostic fee on top of that. And gosh, I hit the wrong button. Let's get a diagnostic fee on here. All right, so we have a diagnostic fee. and 2 tasks for 50 minutes, and they could get, that could be their pay. They could get paid that amount of time to do this work. So that's an option for you. By the way, if you didn't know it, let's right click. Same thing as clicking the menu. You can just right click anywhere. Go down towards the bottom and you should see form preferences right there. Let's open that. If you weren't aware of it, you can add or remove elements of this invoice. And reason why I came in here, I wanted to show it to you, is I realized I didn't have my minutes exposed. So let's click that. So now here we have labor minutes of 50 right up there, so you can see the total labor time. But then what about the diagnostic fee? Let's look at that. Let's go to details. Or pardon me, let's put our cursor in there and go to item and edit item. And find out what is going on with this. No labor minutes. So let's add 60 to that. Fix that one. And it still says 50. Why is that? Well, because it was already on there. When I added it, it didn't have any minutes. So how do we fix it? Well, if we were to save it, it would fix it. If we were to close it, save and close and reopen it, it's fixed. But another thing I can do is re-add the item and then get rid of the other one. So the technician would get 110 minutes in this case. But they could also get, and this is the important part, they could also get the bonus or SPIFF, whatever you want to call it, that's associated with each item. So there could be another $10, $15, $20 in there as well. When would you use that? Would you ever pay labor minutes and a SPIFF on an item? Yes, certainly on service agreements. We already talked about that. $15, $10 for each additional system. Put $5 in a bucket for the office. But there may be other items that you want to give them a little extra money on. Let's say you run a plumbing company and you have a good garbage disposal, a better one, and the best garbage disposal. And you would tell your plumbers, for the good, you're not going to get anything extra. For the better, I've put $5 in there, and you're going to get $5. For the best, you're going to get $12, $15, whatever amount you decide. My only advice is make it a certain amount of money that you're not embarrassed that the customer would find out. So if the customer found out that you gave them $10 to sell the best garbage disposal, $5 to sell the better one, and no extra money to sell the good one, would that be embarrassing to you? Well, you might be thinking, how are they going to find out? I don't have to worry about it. But I like to always use that litmus test for compensation based on performance. Would I be embarrassed if anybody found out? In this case, no, I wouldn't be. In fact, I'd even tell the customer, hey, full disclosure, if you do go with the best one, I get $12, I get $15. If you go with the middle one, I get $10. And if you go with the good one, which, by the way, isn't all that good, to be honest, because it's about the same thing as the builder grade garbage disposal that we're replacing, that rusted out and leaked into the basement and messed up your ceiling. It's really the same thing. But if I sell you that one, I don't get anything. And the whole reason is my boss doesn't want you to buy that one. But he thinks that if he doesn't give me a little extra money, I'm not going to mention more expensive stuff that might be better for you. Well, that might be the explanation. You might like it or not. But if you can explain it and you're comfortable with that, then it's a good, solid amount of money. I'd be comfortable with it. All right, once we save that invoice, then all of this will flow into the payroll. Let's open up our website and type in process payroll and see what is available. Process payroll, process pay group. All right, process the paychecks. I'm going to go to pay group. And here's what I wanted to do. I wanted to go into the process pay group and show you where you assign the commissions. So that's what you would do, is process your pay group here, and it will give you a list of all the commissions that are available for each employee, and you can sort through them and decide which ones you want to pay. Now, when you do select one to pay, you can edit that amount, but also if you don't select one, maybe the invoice hasn't been paid, and you will see that in the list. Maybe you don't want to pay them this time. It will be there the next time. Each time you process payroll, all of these commissions will be in that list, and they will not go away unless you either pay all of it. You can pay some of it and pay the rest of it later. It'll show you the balance. So you either have to pay all of it to get it off the list, or you have to go to the invoice and get rid of it on the invoice. That's the only way. So if you made a mistake, don't just avoid it, don't ignore it, go back to the invoice and fix it. But you do have the option of paying part of it or none of it, because I wouldn't pay commissions on invoices that aren't paid. I'd wait until I was paid before I paid out my commissions, especially to a commissioned salesperson. Now, once you do that, then it just becomes part of the paychecks, and there's nothing else to know about it. We should talk a little bit about payroll setup. If you go to your payroll items list, I would recommend having dedicated earning items for your sales commissions. If you're paying piecemeal, you could set up a specific earning item for that, but really that's just labor. That's no different than paying a person an hourly rate as far as I'm concerned, as far as the accounting is concerned. Let me put it that way. It doesn't really make it necessary to have a special earning item, but commissions are different. So I'll just open one up as an example. When you create a commission earning item, it's very much like creating any other earning item, but you're going to use a fixed amount. And don't let fixed confuse you. It doesn't mean you can't change it. It means that you can type in whatever amount you want when you're in the payroll system. But I would create one like this based on the need for sales commissions, paying out sales commissions. Have one especially for that. Otherwise, you do not need a special earning item unless you think it is of some value. If you decide you want to pay piecemeal, then be sure they are still clocking in and clocking out every day. You do have to pay them overtime. There isn't a way around that. And I'm sure of it because all states can be tougher than federal law, but no state can be weaker than federal law. And in this case, the body of law that we have to concern ourselves with is called the Fair Labor Standard Act, and it hasn't changed in quite a while. One thing the Fair Labor Standard Act is real strict on, and it's surprisingly not that strict, but one thing it's very strict on is you must pay overtime. Overtime is anything over 40 hours in 7 contiguous days. You have to pay overtime. That's federal. The state can have their own rules, but they have to be stronger. They can't be weaker. Most states simply follow the Fair Labor Standard Act, but they can be tougher. They just can't be weaker. So there's really no way around the overtime thing. No matter how you pay people, you've got to pay them overtime unless they are salaried. And there are rules about who can be paid a salary. Also, I won't go into it too deeply, but be real careful about having 1099 workers when they're misclassified. A 1099, as you may know, means that they're not an employee and you're paying them as if they were an outside subcontractor. In many cases, companies are doing that incorrectly. Long story made short, if you're the boss, they're not a subcontractor, they're an employee. They have to be a W-2, not a 1099. If they wear your uniform, drive your vehicle, they are especially an employee. But the bottom line is if you call the shots, if you tell them they have to work tomorrow or what time or where they're supposed to go, anything like that, they're an employee. So be careful about that. Otherwise, W-2. Do we have any questions?
Yes. If I edit items to add commission amounts, will it change or alter things invoiced in the past, or is it just future?
Future. So I'll repeat that question in case you didn't see it or hear it. If you go in and modify an item, commissions, will that change anything that you've done in the past? Will it change invoices that you've created in the past? And the answer is no. You're safe in doing work like that. You might have noticed that sometimes you'll edit an item and you'll change a chart of account, and the software will say, "Are you sure you changed a chart of account? Are you sure you want to do that?" "Yes, I am." And then the next question is, "Hey, do you want to change historical information? Like, do you want to go back in time and act as if you always had this certain chart of account picked?" And you can say yes or no and even pick a cutoff date, a date range. But that only applies to chart of accounts. Everything else you do, it won't affect past financial records. Other question? No? Good? Okay. All right. So the whole thing really is easy once you get it set up, and the key is decide what items are commissionable and type in that dollar amount. After you do that, then just set up your commission methods and go to each employee and set their default commission method. You can only have one, but you can pick as many as you want on the fly, and then point that commission method to the correct earning item. And as far as paying commissions, bonuses, and SPIFFS are concerned, I do recommend a special earning item for salespeople, especially commissions like that, but also for little bonuses, $10 here, $20 there. For piecemeal, I don't think it's necessary, but by all means, you could, but that should go absolutely to costs of goods sold. You can combine many of these together, as I mentioned, and it's pretty easy to sort out during payroll. I would recommend that you write out some basic SOP, standard operating procedure, on how to handle this. One thing that really you got to make sure of is somebody is auditing commissions. Somebody needs to be in charge of going into an invoice and making sure that the commissions were assigned properly. Were they assigned? Are they correct? Have they been doubled, modified? Are we paying too much? It's really important because we're talking about payroll here, right? That's very expensive. So you've got to be sure that the invoice is correct. And then once it flows to payroll, it should be fine. But it's the payroll person that ultimately decides go or don't go with paying the commissions. They have to be comfortable that the commissions are real and that they are correct. Now, if you give me permission to edit the invoice and my job is to check it, then I could go to menu, I could go to assign commissions, and then I could type in the memo field, my initials, and the word checked or approved or something like that. So I could approve in that manner if I wanted to. Also, you could use the stage feature. You'll notice I have a lot of stages in my invoice. The stage feature could have, the stage list could have something in here called ready for commission approval. And then the next one after that is commissions are approved, ready for payroll. That's another way of doing it. You might even do both. But just don't make the mistake, I've seen it before, just don't make the mistake of paying out commissions that you should have never paid. You'll probably never see that money again. If you didn't pay somebody and you find out, well, you can always make good on that and they'll appreciate the honesty and it'll feel like a bonus to them. But you can't go back to somebody and say, give me my money back, because not only is that an awkward conversation, but chances are you're going to have a hard time getting it, especially if it's a lot. So be sure to have this approved by somebody. And if it's everybody's job in the office, it's nobody's job. So you really have to point to somebody's title. Don't use their name, use a title. You point to a title and say, if you have this title, then you're responsible for the following, which could include approving sales commissions, bonuses, and SPIFFS. And again, write that up into an SOP, a standard operating procedure document.
We have two questions, James.
Two questions. Yes, go ahead.
Can you explain how the commission is affected, for example, 15% discount for MA?
MA. Oh, maintenance agreement. Okay. Yeah. Question was, can I explain how a 15% discount for a service agreement, owning a service agreement, might affect the commissions? It may or may not. So depending on how you set it up, if you are paying a commission on every item on that invoice, if you add a discount, that won't change the commission on those items. To be clear, I'm talking about what we call an item commission. $10 for this, $5 for that, $20 for the other thing. It also, the discount won't affect paying book time, the flat rate time we talked about. It's only going to affect those that have to do with the total amount of the invoice, like you're paying a commission on the retail price of the invoice. Any of those which have something to do with the subtotal, the total amount, the gross profit, those the commission will have an effect on. It just will not have an effect on an item by item basis. And other question?
When assigning commissions, will there ever be a way that the program can see what is sold and auto-populate in the assigned commissions list? Currently, we can only have one default commission method for each employee.
So the question is, can someday it fill out an entire list of commissions that are due for an employee on an invoice? Well, let me explain. So we have three things on here. I'll go down to assign work orders, and if I have the question wrong, be sure to follow up. So I think the question is, I picked assign work orders. I meant to pick assign commissions. The question is, could this fill out automatically for everything that's on the invoice? And yeah, I mean, the short answer is sure, we could do that, and I would want to, because I really like this feature, and I'd like to improve on it. I'd like to get more people using it. I'm surprised how many people don't use it. Do keep in mind, though, one line on here could represent the commission on 50 items. So you might have 50 items on here, and you open this up and see only one line. You might think, I've got to add a commission for every other line item on here, and you don't, because it's totaling up, in this case, when it's an item commission, it's totaling up all of those commissions or SPIFFS and putting them in one line. I think what would be nice, and I think this is the direction of the question, instead of having one default method, could I just have a list of methods? And then every method gets looked at when this form is populated. And I think that would be a good idea. I think that would improve the feature, certainly. So if I didn't get that question correct, be sure to follow up. But I think there was a second question.
You're good.
Oh, good. Okay. All right. By the way, a lot of times in our software, we don't work on things because people aren't talking about it. So I really like people talking about these things and asking for different ways to do things, or will you ever consider doing something? I like those discussions because otherwise I think people just aren't using the features. We have no way of spying on your usage. I really wish we did, but it's not something that I'm comfortable with. But I wish I knew what everybody was clicking, because then I could say to myself, gosh, nobody is using the XYZ feature, but they are definitely using this other thing. We should improve that other thing. Otherwise I would just never know. We wouldn't know what you were using.
We do have one more question.
Another question. Okay.
How do we pay our tech if we add the 15% discount for a repair and we get percent of gross markup when it gets to payroll? Depending on the repair, the commission is a negative even if we override it in the invoice.
All right. So the question is how... I'm having a hard time rewording that. I want to make sure I'm real clear on it. Say that to me again, please.
How do we pay our tech if we add the 15% discount for a repair and we pay percent of gross markup when it gets to payroll?
Okay.
Depending on the repair, the commission is a negative even if we override it in the invoice.
Okay, gross markup. That was the key. So they're asking about they use a gross markup method to pay a commission, and they apply a discount for a service agreement, and it can sometimes cause the commission to run into the negative. Let's first go have a look at our commission methods, and I'm going to make sure that I pull up the correct one. So they would be using a percent of gross profit on materials, perhaps. Let them, if you would please, tell us which one you're using. I want to make sure I get this right. Are you using the percentage of gross profit on materials?
They said yes.
Yes, okay, so the answer is yes. All right, so just so we're all clear, what is this doing? It's calculating a sales commission based on the gross profit dollars of all materials. And the formula, maybe it's obvious, retail price minus the direct cost. Sales tax is never part of the calculation. So if the idea is to really pay somebody based on gross profit for the material, well, there may be no gross profit to pay them. So it would be a negative number. The issue might be that since we're not paying them anything for labor's contribution to the retail price, so labor is not being factored in here, and it might be contributing to the retail price significantly. If we're not doing that, then that alarm, by the way, told me it's 1 hour. Don't keep these people away from their work for another, hour. So that's my brevity alarm. It's like, hey, shut up, James. But yeah, there may not be enough gross profit dollars to pay them. So to fix that, we need to think about a different commission method that gets you what you're trying to achieve, but doesn't have the possibility of running into a negative number, because the calculation is real simple. Assuming that your direct cost is calculated accurately, meaning that it knows the direct cost and your accounting is good and all that's correct, then it's just based on the fact that you just don't have gross profit dollars to pay a commission. So I don't know how we could fix that unless we approach it with a different method. Other questions? Okay. All right. So there's a help topic that explains all of these. And as you might know, you can push F1 on your keyboard. And it usually takes you, shame on me, I'll have to look at that. Usually it takes you to just the right place. So I'm going to have to do it the old-fashioned way, type in a keyword, and I'll just type in commission to see what I get. And sales commission tracking, I'll click that. And if that wasn't the correct one, then I would just search again. But I wanted to show you the help topic because it does explain each of these. If it's not explained well enough on the form, then it does explain each one of those, and you might find that helpful. And there's tips, of course. It's a pretty big topic. So you might check that out. All right.
We do have a question, but it's not really a question, it's more of a comment.
Tell you what, comment, let me say this, in case I don't forget. Final call for questions. If you have any questions, I'm in no hurry. I just promised myself I wasn't going to make you sit through 2 hours today. That's why my alarm went off in 1 hour. So ask all the questions you like. And I'm sorry, Will, I interrupted you. Go ahead.
There you go. This was following up to what you said about the gross profit of materials. Yes, we pay using the gross profit of materials as well and have the issue when a discount on the invoice. We needed to look at the amount after discounts and look at sales tax and non-inventory parts. We are having to do manual calculations for this.
Okay. So I heard some new information in there. Sales tax, I'd be careful if I heard this right. I'd be careful about paying commission on sales tax because sales tax, if it's being used the way sales tax is normally being used, sales tax is not something that you ever have. It never shows up on your income statement. It's not income at all. So you're simply collecting tax at gunpoint, literally. You're simply collecting tax for the agency and passing that money on to them. You don't want to give anybody a commission of that because there's nothing to give. You're just passing it on. So I would never check that box that says, include sales tax in these calculations. But I think the follow-up question on that was that they, again, want to pay a commission. Maybe they want to pay a commission. Maybe what you're trying to do is pay the commission before the discount, but you want to pay based on gross profit. I mean, that might be what you're trying to achieve. So it might be that what you want is, I want to pay a % of gross profit on materials without considering the discount. That might be it. But I think that with all these different methods that are available, you should be able to achieve what you want. My advice is, and feel free to reach out and put in a support ticket if you want to. And that support ticket will probably come back to me and say, hey, this person was online and had this question, and I'll help address it in writing so I can think about it and write it out. But here's my general advice on dealing with software. First, think about how you would do it on paper. If you had no software, how would you pay them on paper? What would be the calculation? What would be the method? Because even if you don't have an accounting system, you still have costs of goods sold. You still have revenue. And so income minus COGS is gross profit, no matter what software or no software. So how would you do that calculation manually? First, think about that. Then we can apply that to the software. So we always want to think about, how would a company do this without a software program? And once we answer that, we usually can apply the software to that process. Otherwise, what we would then do is we would think about, what outcome are we looking for? So it may be that the calculation is impossible. So what's the outcome? Well, I'm trying to bonus my people. What for? Doing their job. Doing what part of the job? So we just break it down to figure out what we're trying to do, and we may have to come up with a different way of doing it, but it ultimately gives us the same result. But again, I would feel free to put in a support ticket for that, and they'll come to me with it, and I'll work on it. What I like to do is answer those things whenever possible in writing, and then I make it part of our documentation. Like a lot of those help topics I wrote, just a few people write those, and we're pretty good about going and updating them and adding to them with questions like that when we answer them in writing. Final questions?
Well, this is the last part of the comment, the previous comment.
Okay.
He just said that he wants to pay after the discount.
After the discount. Okay, so the comment was he wants to pay after the discount. Now, I must be missing something because, and I'm not trying to sound like a smart aleck, I feel like I'm missing something, because if you sell it for $10 and it cost you 11 and you lost $1, there's no commission to pay. So you would want to pay, perhaps what you would want to do is pay based on the retail price. So you have control over the retail price, correct? So let's say that you have a $100 item and you want to pay a $10 commission on it. What you might consider doing is just simply paying 10% of the retail price, which would get them the $10. So you might think about it in terms of not gross profit, but the retail price, since it's you that sets the retail price. That might work for you. Otherwise, I'm not sure what else I can suggest. You could, depending on how many discounts are on there, you could look at paying a % of the subtotal. What does that do? Calculates a sales commission based on the subtotal of the invoice. Sales tax will not be part of the calculation. It's not. What will that do? Well, you could have a subtotal and then a discount. It's going to look at the subtotal. It's not going to look at the discount. That might work for you. You might try that out. But that last piece of info, I think, helped me understand more what you're trying to achieve, and it might, the subtotal technique might work out for you. But anyway, I might be missing something because I wouldn't be paying commissions on negative gross profit dollars. That's probably not what you're trying to do, but That's kind of what it sounds like. Final questions, Will, or comments?
Yes, this is this is back to the 15% discount question that was earlier. He said, I wanted to pay commission before discount and have manual put into the invoice, but when brought into payroll, it applies the discount and goes negative. The discount is 15% off the total, not just part.
Okay, some additional information on that. I think what I'd like you to have you do is put all of that, heck, you can copy and paste a lot of what you've already asked today, but put all of that in a support ticket, please, because I want to think it through, and then I want to write a document on that. I'll give you an example real quick here of what I try to do. What I'm bringing up here is a question that I answered in writing. So somebody asked me this question, and I said, that's a good question. Rather than try to explain it, would you mind if I put that in writing and I'll get you the answer? And if you have any questions about it, feel free to ask me, but I'll put it in writing, and that way I've got it for everybody else forever. And this is what it might look like. So this was a question about a uniform program. We want to create a uniform program, and they explained all the details to me. And then I said, okay, let me put that in writing. What I'll do is I'll summarize the question, and then rather than a short answer, I'll take the time to create a really good answer that explains how to do it. So this is what a lot of software companies would call a knowledge-based article. It's a correct term, but I don't really think of it in terms like that. I just think of it as advice, writing specific advice for how to do something in our software. But that's what I can deliver to you, is something like that. And it may be that I don't see any way to get it done. There's just no good way to do it. And at that point, if I feel like there's an absolute business case for it, like this is something we should be doing, then I'll see about modifying the software so that it can handle it. All right. Final questions?
I don't have any right now.
No more. Okay. Well, thank you very much for being here today. I appreciate it. I appreciate all of you that came to Aptora University, by the way. I don't have an Aptora University to hawk on this video, but we'll be scheduling another one soon, and I hope to see lots of new faces there. On behalf of all of my coworkers at Aptora, thank you for being our customer. Thank you for being here, and I wish you a good night.